Let's say that you are a rabbit, and your job, your mission, is to build a team with another animal in the forest and try to make it through the forest. Now, the forest is dangerous. There's a lot of challenges along the way. A lot of other animals that are not on your team are against you. So if they're not with you, they're going to be against you. So your job is to choose one animal to try to get through the forest as your teammate. You can choose the big bad wolf, who has lots of characteristics that are strong, might be a good partner for you, but he also has some weaknesses, right? May not be the best choice. You can pick the monkey. Monkeys are cute, they're loyal, they can swing through the trees, but I'm not sure how much they could defend you. You could choose the orangutan. The orangutan is strong, big, long arms, can swing through the trees, big old teeth, and they have those big pink rosy butts. Or you could finally pick the gorilla. Now, the gorilla's huge, they're loud, he can pick you up and carry you, can scare other animals, can swing through the trees. Which one are you going to pick? I could tell you, if it were me and I had to choose from one of them, I would pick the big gorilla. And it's the same thing with the concept of relative strength in the markets. If you're going to go through the perilous markets with all these dangers, you want to have something on your side, someone on your side, a teammate that is the strongest possible teammate that you could get relative to the other ones. Because a gorilla could probably beat an orangutan, or a monkey, or it could probably beat the wolf. So if you're going to have a teammate, you want that teammate to be the strongest one possible. The same is true navigating through the markets and using relative strength. When you look at Investopedia and you look up their relative strength definition, they say relative strength calculates which investments are the strongest performers compared to the overall market and recommends those investments for purchase. Relative strength is a buy high, sell higher strategy that assumes that a stock whose price has been rising will continue its upward trajectory. Now, to me, that's a good thing. You want stocks to be going higher. A lot of people say, I don't want to buy a stock that's breaking its 52-week highs. Well, how do you expect it to go higher if it doesn't get to its 52-week high? So we want those stocks that are hitting those highs, that are hitting the upper right quadrant of that chart. To give you an idea how powerful relative strength is, this is a chart if you took $100,000 for a year and put it into higher growth stocks and traded with the high relative strength of those stocks, you would have returned 178% annual return versus the S&P 500, which only returned about 15 or 16%. You'd have turned that $100,000 investment into $277,000, or that $10,000 investment into, say, $27,000. Can you see why we believe in the power of relative strength? So here's a chart of Netflix, and if you look at Netflix, you'll see a few averages here. You have your 10-week moving average, your 40-week, and then this blue line is the relative strength line. This is the relative strength compared to the S&P 500. So right now you're seeing that it has a relative strength rating of 99 from Investors Business Daily, which is the best you can get. But it's also performing better than all of the other stocks. Look at it. As it continues to go higher, so does the stock. When the relative strength pulls back, well, so does the stock. Same thing here with C-Trip. When that stock is hitting highs, you see the relative strength commensurate with that. And as it keeps hitting those highs, and that relative strength just keeps going higher. So a lot of traders just trade that relative strength line. And as long as it keeps going up, it keeps going higher, the stock is probably going to keep going higher, and you can pile on or pyramid up. If you look at Baidu, Baidu is doing the same thing. It's back in its upper right quadrant, and look at that relative strength. When the relative strength went down, the stock couldn't get out of its own way, and then it hit a bottom, and then now it started to spike up. And so you're seeing it trade commensurate with how it trades against the S&P 500. So when you look at a stock, make sure you have that gorilla on your side. You want to trade with the mutual funds, not against them, because they have too much money. We're rabbits. We can get in, we can get out. But mutual funds are the slow gorillas. They're the strength. When they move slowly, but they move strongly. And so you want to choose wisely when you're choosing a partner or a strategy when you're trying to go through the market. And you want to choose that gorilla. Choose the strength and get relative strength on your side. If you choose incorrectly, you become dead meat. But if you choose properly, you become that cute rabbit that is successful and is the winner on the other side of that forest because you're using relative strength on your side.